Hello, I'm London. I'm back with another video today showcasing my 2026 investment plan. So we're using Blossom. We're in the Blossom portfolio. You see today I have a 0.62% gain, not worried. Up a little more than I was all time. This is due to Google rallying, TSM recently rallying, Constellation recovering, etc. But this is my 2026 investment plan. So I believe in 2026. By the way, I'm no financial advisor. I'm no predictor. I don't really keep up with news. But I believe in 2026. 2026 will belong to what best powers AI, which is data centers and energy, and in specific, nuclear energy. And we'll get into that. Nuclear energy, first of all, is one of the most sustainable, cost-efficient, and a very clean source of energy that a lot of companies have been using nowadays. So if I go here to Meta, if you look at the news in Meta today, Oklo, this caused Oklo to surge and Vistra Corp to surge because they're focused on the next generation of what can support their compute power, which is nuclear energy ultimately. Now, I do not hold Oklo or Vistra. I hold Constellation Energy, and I will be adding a lot to Constellation. They're currently on a dip right now, but I do not have cash and capital to allocate funds towards them, but I will make them a heavy position in my portfolio. Simply because the pivot to what powers AI is going to be a growing market. Again, with OpenAI's ChatGPT model, with Gemini models, with AI integration coming into businesses and augmenting their power, we need to take a step back and look at what truly powers them, which is energy. These AI models are in a constant need for energy, which comes to data centers. That's why I hold Alphabet, because you have Google Cloud, AWS, Oracle's outdated databases, or Microsoft Azure. They all host cloud computing to help these AIs. It's like a big brain to help these AIs. Obviously, that's growing. I live in Virginia. In Northern Virginia especially, they're buying up land. They're filing for permits. You see hyperscalers like AWS, Google. Google has an existing factory here. Amazon already has an existing factory. Meta has a super factory. NVIDIA even announced expansion into Virginia. That's crazy, but they're doing it to build out these data centers because, again, the mind of this AI and the mind of technology is getting huge, and it's needing to consume more and more to sustain itself. So what do these companies do? They pour out capex, they pour out money, they pour out capital into the economy to help best build out these AI data centers. And again, they're turning to what powers them. That's why you see Caterpillar. Caterpillar is not an energy company, but it's more of an industrial company. Constellation Energy, I have here. I don't know why I have it on my watch list anymore. I hold it currently. You see Oklo, Nano Nuclear Energy. And most energy companies should be getting a great surge in energy, especially with the ongoing pivot to nuclear energy. That's the whole reason why I hold Constellation. Now, with that being said, I'm not going to turn away from the norms of, again, paying attention to the AI trade and what that has to do with everything. Because essentially AI isn't really everything. In a stable portfolio, you can't be too over leveraged in AI. That's why I have here in my portfolio, I have Google, I hold UNH, and I hold TSM. Because ultimately these kind of offset the AI trade. Now I know what you're saying with TSM, but TSM is a very monopolistic type of company. First of all, what it does is it manufactures semiconductor equipment for advanced chip technology. So pretty much everything needs chips nowadays, computers, any sort of technology, cars, etc. They're selling to NVIDIA and AMD, no question about that. Again, whichever company controls the market share, it ultimately doesn't matter to TSM because it's so important to the whole semiconductor industry. Now, there's macroeconomic circumstances surrounding this company, but ultimately I believe geopolitically it is too important. So, with Google, my case with this is that I'm going to keep on adding to it they have increasingly earnings-driven stock price. Their cloud growth, their earnings, their revenue, it's all amazing. Everything is just amazing about this company. I'm going to continue adding to it. Now, for the markets in 2026, I believe we should be cautious around AI and in specific CapEx, what they put out, what they're spending their money on. We see that the case with Oracle. Earlier this year in October, OpenAI announced a deal with Oracle for $300 billion throughout 2027 for 5 years, so $60 billion a year for them to implement Oracle's databases, for them to use Oracle's databases to build out AI infrastructure. Now, obviously now, if you look at Oracle, their stock price has deviated a lot from where it once was. So it's down 199. This is because Oracle decided to spend a lot of money on CapEx to sustain their databases, to sustain what they have. Their recent earnings was okay, but it was piss poor because investors were worried about margin suppression and about how much money they're spending into AI. Same thing with Meta. Investors got concerned about CapEx. That's why their stock price is suppressed, but I believe they'll get through it. But Oracle is a prime company, a prime example of a company trying to keep up with today's market. Ultimately, you can't. AI is going to keep getting bigger. You're going to have to keep spending more money. And if you don't have a sustainable business model, you're not going to survive. You're going to get crushed by competitors. Now, Oracle's cloud computing databases are getting crushed by something better like Google, Microsoft Azure, Amazon Web Services in specific. They're getting crushed. They're getting hammered by their competition. Now, overall, I believe 2026 will be a year of gains. I'm not a bear on 2026 at all. But again, I believe 2026 will be a pivot towards what best powers AI. I also believe that in 2026, we'll see possible sanctions against AI, possible laws and regulations regulating the use of AI in commerce and just regulating the use of AI in our day-to-day life because it is getting extremely powerful. And with great power should come limits. I believe that. So I'm no wizard or predictor of the future, but I believe we'll see a major stock suppression whenever things do come out about AI and warnings against it. Again, earlier this year, we saw Google's stock price was flat and becoming suppressed. This was because of the tariffs on April 7, but was also because that people said that Alphabet and Google search would become irrelevant by the time ChatGPT got big enough. Now, obviously, we've seen a pivot, and there's been cases that people just couldn't really implement ChatGPT the way that they could implement Google search, and there are differences with that. But again, all the more you should be careful in today's market, in today's AI trade, but I am not bearing it. I believe there's tons of gains to be made. That's why I have Nebius Group and Cypher on my watch list. That's why I have ASML. Again, they're an extremely monopolistic company. That's why I have CAT, the industrial supply and demand, AWS system through Amazon and their growing e-commerce business. But ultimately, Nebius Group and Cypher, I will swing between the two, just like I am doing with IonQ with quantum computing, because quantum computing wouldn't remain profitable until 2029 or 2030, and no one even really knows the true power of it. I'm just using it to swing trade, to earn quick profits. But in my closing, I do definitely believe that in what I have in my investment plan is to invest in companies that are the backbone of what's going on today. Now, I know you won't really get all the gains through what NVIDIA has been doing and investing in the front runners, but I'm a little more cautious when it comes to this whole AI thing because I believe that directly leveraged companies in it, you can learn a lot from the dot-com bubble. Companies that are directly leveraged in it when things go bad and when stuff hits the fan, their stock price suppression will go down no matter what. No matter if their earnings are good, no matter anything. People will get scared, people will jump out, and I'll be the one left bag holding. So to prevent that downside risk, I'm simply not really diversifying away, but I'm looking into surrounding sectors that AI will lift going into this year. Now that is all for today's video. Please be aware this year regarding your investment decisions, regarding jumping into a stock when it's overvalued, regarding news around a certain sector around a stock, fear-mongering, and remember to buy those dips on your important companies and on those fundamentally strong companies because you have conviction that it will go up. Have fun.